So if I go to the MT4 platform again to let you see how the 20 SMA interact with the prices, let me give you a random date. 1st of March 2016. You realize that almost every day the price has to come down and touch 20 SMA. Okay, and this one, bear in mind this currency pair dollar yen. And it's only once in a blue moon that it wouldn't touch 20 SMA. Okay, only once in a blue moon. But 90% of the time, it would have to touch 20 SMA for the day. Okay, if I continue to scroll, you realize that every day, this day, this day, this day, this day, and here you realize that for this day, it didn't touch 20 SMA at all. Okay, but then the next morning comes, it has to come down and touch 20 SMA. Alright, so normally when the whole entire day didn't touch 20 SMA, the next morning very likely the price has to come down and touch 20 SMA. Okay, if I scroll again, you realize that all days it touched 20 SMA. Okay, for all these days. Okay, you realize another time. Alright, this day it didn't touch 20 SMA, but the rest of the days it did. Okay, rest of the days it did. And of course, when it didn't touch, you realize that the next morning, right at the start, it touched 20 SMA. Alright. Okay, if I scroll again, scroll a little bit more, you see all the days it touched 20 SMA. Except for this day, you see, it didn't touch 20 SMA. But for the rest of the days, it did. Okay, for all of these days, except for this day. And you realize that the price immediately, next day, it shot up, okay, to touch 20 SMA. And there's a big shoot up to 20 SMA. And same thing, you look at this part, bullish trend. I wouldn't make a buy over here or here because you know price has to come down. The best thing is don't trade at all when for today it hasn't touched 20 SMA. Okay, if you look at H4, let's say for this particular time frame, for this week you realize that it has touched 20 SMA. Okay, but for the day it hasn't touched. So if H4 has touched 20 SMA but H1 hasn't touched 20 SMA, we still wouldn't want to go in. Okay, because personally for me, I take H1 more into consideration than H4. Similarly, you wouldn't want to make a sell over here because you know that the price has to go up and touch 20 SMA. Okay, you see for all these days it touched 20 SMA. Same thing over here, you wouldn't want to make a buy anywhere here because the price, you see, immediately shot down by 30 plus pips, 39 pips to touch 20 SMA. Then a lot of people ask, Karen, can I make a short sell over here? The answer is no, because when you short sell over here, you are trading against the trend. Remember rule number 1, never ever trade against the trend. When you're selling here, look at where 100 SMA is going. It is sloping upwards and the candlesticks are all above 100 SMA. So when you are selling here, you're trading against the trend. Okay, and the second reason is because we wouldn't know when it's going to retrace and touch 20 SMA. Sometimes it gives you false signals, like false retracement. Like over here, you see, there's a slight small retracement over here, then it shot back up. Okay, so you won't want to make a sell, like make a bet, unless you see when the price is above 20 SMA on the short trade. Okay, then same thing, you wouldn't want to buy in anticipation that it is going to shoot up to 20 SMA on a bearish trend, because you look at this one's a false signal. You see, it went bullish a little bit, but barely almost touched 20 SMA, but really didn't touch. Okay, it's only later on that it come back up and touch 20 SMA. A very common question that I get from a lot of my students. Karen, is this considered a touch of the 20 SMA. You look at this. The wick is just lying below the 20 SMA. Now if you see this happening, I would say that it is not considered a touch, because you would want at least the wick to cross the 20 SMA. If you see this, it's just nicely laying below the 20 SMA or above 20 SMA, we don't consider it. Only when it is obvious that it has touched, then you consider the criteria fulfilled. Okay, like this one is very obvious. The wick crossed 20 SMA, very obvious it has touched 20 SMA. Okay, like this one also. The wick crossed 20 SMA, it has touched. Again, for this one, you look at this. It is not considered as a touch because the wick is just nicely laying on top of the 20 SMA. If you have went in, you would have get killed. Okay, because the price eventually went up and then retraced back down to finally touch 20 SMA. Okay, so this candle, obviously it hasn't touched 20 SMA, this green candle right here, but then this red candle is considered because you see the whole body, it crossed the white line. Okay, so what you want to see is the wick to cross 20 SMA. Like for example, this candlestick, you look at the wick, it crossed 20 SMA. It is very obvious as compared to the previous ones where you can't really tell whether it has touched, then it's not considered. When you can't tell whether it has happened, then it's not considered. Okay,